Friday, October 18th. And like Mandelbaum says in Seinfeld, it's go time. It's go time, cream puff. We got a lot to go over. We got Netflix. We got why this is a bull market and could it continue? We got Taiwan Semi. We've got NVIDIA, of course. Apple is soaring today after your boy sold some at 230. We'll talk about that. China. Motley Fool name that came out today. We're going to go over their analysis. Since I'm not an affiliate of Motley Fool and I don't suggest them, I suggest Seeking Alpha. It's far better. A stock from yesterday is up a raging 200-something%. Another stock is up 67%, but is it? Is it? And then Amex, Procter & Gamble, and earnings for next week, plus a stock in our scans that I'm going to buy. So let's kind of get into it a little bit. Qs. Yesterday, we saw a little bit, this is opened at 496. You closed the morning at 494. You opened the afternoon at 494. You closed it at 491. The Qs, nothing. Looked like it was going to be a strong day. Turned out to be nothing. We're kind of in no man's land. Are you buying into this? I'd still say it's a Friday. I don't think you want to buy into this, but history says the stock market's bull run could keep going for years. And I want to read a couple of quotes here. Dietrich found 12 bull markets from 1950 with 5 of them starting in October. The good news is once bull markets make it past their second birthday, they tend to last multiple years. He's the chief market strategist at Carson Group. Okay. Remember, October 2022, if you go to a monthly chart here, October 2022 was the bottom. That was the start of this bull market. It's not back here because this was officially a bear market in 2022, October 2022. So we're in year 2. Now, another quote in this article, and you can read this article, it will be in the newsletter. Year 3 of bull markets are usually rather weak, gaining just 2.1%. But gaining 2.1% is better than losing 2.1%. That's my add-in. Usually years 1 and 2 tend to see huge gains, so some type of choppy action or consolidation in the third year would be normal. And he published a table. So in this article, there's a table. If you want to read the table, go and do it. My take on this, and we can look at this QQQ chart. My take, we're in a bull market until we're not. You can't time it. Don't get in and out. Ride it with good companies, with good earnings, with good products, and good management. When one turns to a loser on a longer-term chart, cut it. Shorter-term charts can be trimmed like I did with Apple once you've established the position. Now, I want to caveat with it's a good company with good earnings, with good products, and good management, because that's a key. If you're YOLOing into some of these other stocks, I got an email from a listener yesterday on Instagram because I told him to sell a stock that he had as a loser. I didn't know the stock at the time. Now, was I wrong? Let's go and look, because the stock was SMR. Okay? SMR is a nuclear stock, NuScale Power. I think it's a nuclear stock. It might be a utility. I didn't know what the stock name was, but when he told me it was a loser and how much he was down, I said, cut it. You probably have better opportunities out there. But he asked, and he told me yesterday, hey, this is the stock. It's up 400% since you told me to sell it. And he doesn't mind selling it because it was a loser. But this is a stock in a hot sector. And this isn't a good company with good products, with good earnings, okay? It's an industrial, heavy equipment industrial. And what do? They do, let's see. A NuScale engages in the development and sale of modular light water reactor nuclear power plants to supply energy to electrical generation. Okay, so it's nuclear. Nuclear has gone nuclear. This is a good example of do not ask a douche on the internet if you should buy or sell. Take the information that I give you, process it in your own brain, and make your own decisions. That's what you do. But the company, to me, looks like trash. Their profitability, gross profit margin, 17%. The growth, not bad, but their revenue year over year, minus 22%. Revenue growth going forward, 98%. So they're going to have to live up to the hype. But when you look at the chart history of this one, it doesn't look like they've lived up to the hype. Again, they had this huge drop. And now that nuclear power has come back into favor, let's look at the valuation. They're not making money. They're not making money. When you look at Wall Street, they say it's a buy. 8 analysts cover this. And their average price target is $13. So it's 26%. So in my mind, this does not fall into the good company with good products, with good earnings, and good management. It's a hot sector. So if you're looking to cut your losers, that would be a trade for me. And it wouldn't be something that I would be looking to hold long term. I would have been trading it. So during that downturn that we saw in this one on the weekly, I would absolutely not be trading it. During this upturn, I would be trading it. Now, during this recent downturn where you hit, this one hit 16 and then pulled all the way back to 6. Yeah, that was a time to get out. Now it's a time to get back in. You've got confirmation. So again, are we in a bull market? Absolutely. And the history says that we're in a bull market. But for specific stocks, you have to identify if that's a good long-term hold or if that's a trade. And for me, if I knew it was SMR, I would have said, hey, it's a trade, but cut it. Now it's a hot sector. Trade it. So that's how you look at companies. Now, a good company, TSM, they may have a new catalyst with the next generation of chip manufacturing. This is a great article that you can read. It's an analysis on Seeking Alpha. I liked it. I enjoyed it. Taiwan Semi, good company. It's in the core portfolio. If you look up here to the right, this is the core portfolio in Trendspider. And if we look at the chart on Taiwan Semi and we look at the algorithm on a Taiwan Semi, the algorithm makes you 181%. Okay, it got you in at 167. Buying and holding makes you 230% on this. Oh, this is over 24 months. And by the way, 230% in 2 years? That is a phenomenal stock. This is after Buffett was selling this one 2 years ago. He's just too scared of Taiwan. So he was selling this. I wound up buying it when Buffett thought it was a good idea to sell it. I just held on to it. I talked about it. You can go back. Taiwan Semi is a good company. It is the only manufacturer of chips. Old resistance turns to new support. So when you saw October 5th, when this one come down to 133 on August 5th, sorry, it's August 5th. That was with the Japan unwind. It was a screaming buy. And they said yesterday, hey, we're the only ones that can do what NVIDIA needs us to do. So that's it. If you're afraid of, Taiwan Semi as a whole, here are 10 ETFs that have heavy weighting in Taiwan Semi. So they caught a ride. They were up. You can see the weighting of Taiwan Semi in those. But again, that article will be in the newsletter. Anything that you need in this podcast, whether it's Trendspider with my 4-hour algorithm, whether it's the bundle, the best bundle out there, premium on Seeking Alpha Premium and Alpha Picks. I went over my apologies about yesterday's. Yesterday, I thought I did a great job of explaining how to build your portfolio with Alpha Picks, how to build your portfolio with the Daily Stock Pick Core Portfolio that is in for free in Savvy Trader. How you can follow it for free. There's no cost. And how to build a portfolio in those two. And unfortunately, the sound got screwed up. It won't get screwed up today. It's good. I tested it. But this bundle is the best bundle out there. Okay? You save $159 on your yearly subscription when you sign up through that link on Linktree. And it includes Seeking Alpha Premium, which you'll see me use with the quant every day. You'll see me value stocks on those five categories. Okay? And it is by far the easiest way for me to look at stuff. And if you just want Seeking Alpha Premium because you don't think that Alpha Picks is worth it, you can get Seeking Alpha Premium right here. 30 days offer, free 7-day trial. The bundle doesn't come with a 7-day trial because it includes Alpha Picks. And Alpha Picks is just a data-driven portfolio with, I think it's about 20-something stocks. And I went over it yesterday, how all of those stocks, okay? We went over it yesterday, how it's crazy good. They picked one on the 15th this month. It was up 9%. They picked one on the 1st of the month. It's up 24%. They picked one on 9/15. Again, it's the 1st and 15th. On 9/15, they picked one up. It was up 11%. The one they picked on 9/1 was up 14%. And this is just as of yesterday. The one they picked August 15th, up 27%. Of those 5 names on this podcast, I have only named one. And look at their performance. The great thing about Alpha Picks is they tell you when to sell. So you've got 2 options when it comes to Alpha Picks. You can get the bundle, which saves you $159, or you can get Alpha Picks by itself and save $50 off of that. You don't get Seeking Alpha Premium. If you sign up together, again, you're saving over $159 when you sign up with them together as a bundle. You only save $80 when you sign up for them separately. So consider the bundle. I think that's a good one. Now let's go back to today's notes, on my notes. Let's talk about NVIDIA, because NVIDIA, we'll go to this news story. We'll close this down. We'll close that down. NVIDIA's smothering market share leads Bank of America to raise earnings per share estimate. This isn't a target price estimate. This is earnings per share estimate, but that will drive price. So if we go and take a look at the chart of NVIDIA, it's up 1.42%. I said on this day, okay, October 15th, that 4.93% pullback, it was a day to buy it. It was a day to buy it. You're low, 128. You're trading at 136 now. Now, let's be honest about this one. This previous high here at 140, okay? It hit 140 once. I don't think it hit 140 again. This is the mid-July. Mid-June, June 17th. We haven't touched 140 again. Well, we did touch 140 yesterday, and it pulled off. Old resistance will turn to new support. The problem that you have with NVIDIA, and again, people are going to say, hey, it's overvalued. It's crazy. The quant has had it as a hold. Wall Street says the price target is 149. That's 10% upside. But your 52-week range is between $39. Imagine if you bought this at $39 52 weeks ago, and you're sitting at 140. That's the 52-week range. Yesterday's range, 136 to 140, and it's trading in pre-market at 138. The valuation is the only thing that's crazy on it. And that's the only reason it gets a hold in the quant is the valuation. Now, the PE, 61. NVIDIA's 5-year average, 63. PE going forward, 48. 5-year average, 47. So you're right in line. The PEG ratio is where it's good. The estimates that are out there going forward puts the PEG ratio, which is price to earnings to growth, at 1.26. The 5-year average is 2. So you're well below the 5-year average. Ride the train until you can. And I would argue that this is one of the best opportunities for you to get in. It's not a great opportunity. The great opportunity was in the 4-hour algorithm, where I was telling you to get in here at 113 back in September, where I was telling you to get in at 105 August, where I was telling you to get in at 117 on July 31st. Again, if you're scared of this one, buy on the algorithm. Would you buy right now? No. And the reason you wouldn't buy right now is because the algorithm got you in here at 113. So if you trade the algorithm, you don't want to buy it right now. You want to wait until the algorithm tells you to buy. That 136 is too high from that 113. Now, the algorithm may get you in at 145 next. It might get you out at 150 and then get you back in at 145. But if you're trading the algorithm, you make 926% versus 1,104% if you just buy and hold. I would argue buy and hold is better, but it is what it is. Go and have at it. But I will say NVIDIA, I think, is still one of the best plays that you can do. I don't think it's a bubble. I think they continue to guide higher. And you saw Taiwan Semi earnings. It's time to get in there. I think it's just going to, we have Meta, we have Amazon, we have Google, we have Microsoft, we have all those hyperscalers who are going to announce billions of dollars. If you don't think Mark Zuckerberg is laying people off so he can buy more chips, where's that money going? It's going right to NVIDIA. Now, Netflix's earnings yesterday, they were good. I went live on Substack. If you want to watch the live on Substack, you can go over here and you can just click on the newsletter at Substack. And I posted the video for you to watch. It's boring as hell. It's boring as hell. But the Netflix guy, key takeaways: margin growing higher, user growth still topping, young ad business improving, monetization improving. That's the key takeaways. Everything's going well. The only issue now is valuation. And so if you want to pay, you're going to have to pay up for this. Okay, it went down to 687. You're trading at 734 right now. It's a 6% up. I said yesterday, hold into the earnings, and it dipped down. I wasn't selling, even though the quant said, hey, you might want to sell this. The algorithm said you might want to sell this one because we got a sell signal on the chart right before earnings, right here at 3%. But I held into earnings. I said, I don't think it's a time to sell. Now, where are you? You're up near these all-time highs. And you can sell if you want at 734. It's at 734 right now in pre-market. The valuation is the only craziness on this. Now, the PE is 38. What's the 5-year average? 55. 55. The PE going forward, 35. What's the 5-year average? 46. 46. Okay. Growth, they're growing 13% revenue growth year over year. The 5-year average, 16%. So it's a little bit hard. Remember, next earnings that they have, they will not, I don't think that they're going to announce subscriber stuff. So they're weaning the street off of understanding subscribers. That was why the stock dipped down way back here in April and May, because they said, you know what? We're not going to release subscriber numbers. Boy, don't you wish you bought at 549? You know, again, the RSI is down at 32. The MACD is below the oscillator. I wasn't selling. I think it's a good, again, it's the only one that I pay for. Everything else I password share. And you know what? Here's what they have in their back pocket. If you go to their profitability, they're 43%. Okay. Netflix average gross profit margin is 40. They're still higher. But what they have in their back pocket that they didn't announce was a price increase. Mic drop. Okay? They didn't announce a price increase. You've got 2 NFL games coming up on Christmas. You've got WWE live programming coming to Netflix exclusively next year. They didn't announce a price increase. They're going to spend a little bit, but they're going to charge you more. And they did say in the ad tier, they just can't get enough ads. So that ad tier, the reason it's not doing as well as they thought is because they can't get enough ads in there. It's not that they don't have the ad space. They just can't get the advertisers in. And it's more of a technical issue that they will figure out. Let's talk about my book, iPhone Sales in China. Show renaissance of growth has begun for Apple. It's up 1.76 in pre-market. We will look at this. I sold at 230 thinking that 230 was still resistant. It's not. I think that 230 has now become a support level. You're at 236. Okay. That now breaks this. If we close, say we close at about 238 today, that breaks a little higher than this July all-time high. Okay. iPhone sales. This is a company that runs on iPhone sales. A 52-week range, it goes to 237.49 was the high. So if you go above that and you run up there on Apple, we had a buy right here at 227. I said I wouldn't buy. Right now, I'd probably, if you're looking to get into Apple, buy a couple of shares. Buy a couple of shares today as it dips down to 234, 235. If you can get it at 230, I think that's a good buy. But Apple is one that, in my mind, let's see, the quant says it's a hold. The quant says it's a hold, but they've had it as a hold all the way since 170. And the reason is the valuation. The valuation is crazy. Wall Street, they have a $240 price target on it. Okay? At 236, that's your upside because that's where it's bouncing off of. Wait for the earnings. Honest to God, if you want it, just buy it because I do think you have to wait for the earnings. Because at 34 times forward earnings, that's high. The 5-year average, 27. Again, this is all part of Seeking Alpha that I'm doing this. And you can evaluate your own stock portfolio. One that I do have is Motley Fool. This is my dad's subscription, so I'm not an affiliate with them. So they can call me and say, hey, you can't show this, whatever. Go ahead. But Instacart is their most recent thing. And what I want to show you is the difference between what Motley Fool does and Seeking Alpha, and why I like Seeking Alpha so much more. They just give you words, okay? Why Instacart is a buy. The business is evolving. They talk about how they're delivering Home Depot and Sally Beauty Depot. Whatever. The business is getting better. Why now? Revenue growth has slowed even though it's more than time of double. What could go wrong? Competition could heat up. Remember Walmart, we talked about yesterday with their Prime version, and Amazon. So those are two big players that Instacart's just the delivery. So the economy could stumble and they go over it. Who else to watch? Uber, DoorDash, Shopify, and Ocado. Bottom line, revenue growth may seem unsurprising. I'm just not, we can look at it from how I look at it. But this is why I'm kind of like, a little soft on Motley Fool, is if we go over here and we look at Cart and we say, okay, what's this one? In the quant, it's a strong buy. Now the valuation's C. If we go and look at this one, they're not making money. And that's the business. They're not making money. If we go to their growth, they're growing 10% year over year. It's good. Levered free cash flow growing 756. That's fantastic. You look at their profitability, 74% profit margin. That's great. Momentum in A, revisions of B. It's ranked number 3 out of 14 in the food retail. Tedesco and DDL are tops. But this one has a significantly, Tesco has a bigger market cap. So I'd probably look at Tesco, to be honest with you. Let's look at this one, Tesco. Tesco is high risk of cutting its dividend. Who cares? Who cares? Valuation, they are making money going forward. They're probably going to announce it. Growth, they're growing at 3.8%. This is a grocery chain, I believe. Profitability, 7%. But their return on capital, huge. Most cash from operations, $4.72 billion. Momentum's the strongest one. Huge momentum. Revisions. We can look at this one against Cart. Let's look at this against Cart. Select symbols. Cart. I think this one is one that I would like more than, and maybe I'm just a Motley Fool hater. Maybe I am. Let's look at year to date. Year to date, Cart is up 81%. Tesco only up 26%. So Cart is probably good. But has it made its run? That's part of my problem with Motley Fool is sometimes they get you in a little too late. And their portfolio, it's just not a great metric. But Cart is their latest one. It's interesting. I always look at it and I say, it is what it is. Now, if you are interested in Inverse Kramer, we talked about how he dissed Clover Health yesterday. Clover Health was up 2%. It was up 2% when he dissed it. Now it's down 2%. So Inverse Kramer probably traded that one. One that looked crazy is this Pineapple Energy. And it said it was up 70% at $9 in pre-market. But was it? It's a reverse split, 1 for 50. So I was seeing all this stuff and it's a reverse split. So they just diluted shareholders. It's not. It's not one that was up. Now, one that was up, and we can look at this one, Bright Minds. This is drug. Okay, this is drug, DRUG. And this one is up 58% in pre-market. 58%. It was up 60%. Yesterday, it was down 24% trade, and it closed at $21. Today in pre-market, it's up at $35. Why? It got an inflush of cash. $35 million. This is psychedelics. This is one to keep an eye on. If they're getting $35 million of gross proceeds. Now, remember, this is not making money. This is basically like a coupon. You're just buying a coupon saying, you know what? If they do make money, maybe my stock goes up. It's crazy to pay this price for it, but trading it, you absolutely can. One that I think makes sense to actually buy is Energy Transfer. This is a company that puts off a 7.67% yield. Okay, Wall Street says it's a strong buy with a $19 price target, which is 18% above where it is. With that dividend and this performance, it's worth looking at. I have MPLX. We can go and we can look at, they signed a preliminary deal to build a proposed Louisiana LNG plant. And LNG has been cheap. What we make our money doing is we make our money by exporting cheap natural gas. And that's the way that the U.S. makes its money. Now, we can look at Energy Transfer versus MPLX. Now, what I want to do is when I go to metrics, I want to look at total return because that will include the dividend. And so you look at MPLX versus Energy Transfer. Energy Transfer is up 29%. MPLX up 33% over 1 year. I wouldn't suggest doing this one less than 1 year. Now, over 3 years, Energy Transfer is up 110% versus MPLX at 90%. I haven't done as well. Over 5 years, MPLX is up 181% versus Energy Transfer at 108%. So I'm pretty happy with my MPLX. But if you wanted something that maybe is looking at a little bit higher, we can look at MPLX here. What's their Wall Street price target? We can look at that. Both of them are strong buys, by the way, in the quant. MPLX, their average price target is 47.49 with only a 7% upside. So again, same sector, different companies, just a way to look at it. But either one, in my mind, you're getting a nice dividend with capital appreciation, which is the stock actually going up as well. But the history of that dividend for MPLX and Energy Transfer is good. And remember, Energy Transfer is the one that if we go over here to Finviz and we look at this one and you look at the insider buys, that CEO has been buying. Warren Kelsey bought a ton of this, $47 million right there. He bought $13 million. He bought $13 million. Over the time, he has bought millions of dollars of this at 13, at 15, and it's now trading at $17, at $16.49. So I like that one. There's a lot of reasons why. Let's go into earnings. Amex killed it. Amex killed it on their earnings as network volume growth continued, okay? They killed it. They're down 3%. You never know what earnings are going to do. Look at that run-up, though. That run-up into earnings is what it is. It's a buy. Honest to God, take the opportunity. If you have an Amex card and you want to buy it, go and buy it. It's trading a little bit expensive. That pullback is going to put that PE back in the line with its 5-year trend. That's it. They're just doing so well. Financial companies, we talked about it. They're doing really, really well. If you want to trade it in the 4-hour algorithm, let's see how it trades in the 4-hour algorithm. AXP. We're going to restart this one because it's hung up a little. The longer I go on for some reason in the podcast, the more the actual website, and it's because I'm running this in Safari, and they hate Safari. So AXP 255. You're trading right now at 273. Great buy. The algorithm makes you 90%. Over 2 years, it's 22 positions. Buying and holding makes you 108%. I would argue that you're looking for entries. This is dated back. We're talking about a recent breakout. Okay, we talk about this all the time. How these capitulations right here turn into huge breakouts. Now the RSI, super high, 67. The MACD, way high. Do you want to buy into this one? Let's see what Wall Street says is the price target. Wall Street says 265. You're trading at 272. They're going to up their price targets because the earnings were good. That's what I expect. Procter & Gamble. Sales drop and forecast headwinds. They're basically forecasting that costs are going to be hurt by this. This is an expensive stock. The multiple's a bit crazy to pay. The valuation is nuts. Their growth isn't there. You're paying 26 times for trailing 12 months. 25 is the average. Procter & Gamble PE at 24. I think you can get a cheaper price. So if you're interested in this one, I think you can get a cheaper price. Wall Street, their average price target, 175. I think that's only 3% upside. I think you can get a cheaper price on this one. Next week, Earnings Hub, we've got GE. We've got Verizon, we've got GM, we've got Texas Instrument, Enphase is interesting, Coke, AT&T, VRT, which I actually own. I trimmed that one at 109. Tesla has their earnings, T-Mobile, ServiceNow, Lam Research, UPX, and Dexcom. Dexcom's an interesting one. Because when you look at Dexcom and you look at their earnings, their expected is 43 cents per share, earnings per share, and 989 million in revenue. Now, last time they announced 1 billion in revenue and 43 cents per share. So it's in line. It's not growing. That was, and they announced that, hey, we are going to reduce our forward guidance. And the stock got cut in half. So my dad owns this one. This is glucose monitoring, but the stock got cut in half. Look at that gap. And we haven't touched that gap since. The gap down, well, it went down to 67, but you haven't touched 77. Is this a time, if they actually reach their goals, is this the rebound? If you look at a weekly on this one and you look at it, we're trading the 50 days just hovering above the 200-day. Now, the 200-day, the 50-day hasn't traded below the 200-day since 2018 in this stock. And you're seeing the MACD start to cross up the RSI low. Again, this is a weekly chart. I find it interesting. Now, let's talk about scans. The weekend newsletter, I did start a weekly scan for charts that are on weekly, like this one, that may show promise. And so I'm going to include that in the weekend newsletter. The weekend newsletter will include a weekly scan of stocks that may show bullish tendencies on a weekly. So it's more of an investment using some of the stocks on our watch list on the daily stock pick core portfolio. So it's all up here. If you want that scan, the actual scan will be included in the newsletter so you can import it into your Trendspider system. But the stocks will be included as well. So if you use another charting program and not Trendspider, you'll be able to use that list as well. There, I will tell you, in today's scan list, which I will put in the newsletter, and it's free during the week, there is one stock that I am going to buy. It is on my list of 5% pullbacks, and I said last weekend that it's in last weekend's newsletter. If it pulled back 5% and the algorithm showed me an entry, I was going to buy it. It shows it today. I won't tell you which one. You can comment after you get the newsletter. You can comment down below in Substack, and you can say which one it is. Maybe I'll go live this weekend and tell you which one it is. But TAC is one that it was on our watch list. Is it TAC? No. Hold on. I'm going to go to the scanner right now because I don't think this is one. Desktop pick scanner. I think I miswrote this one down. Core brokerage holdings. I don't think it was this one. I think it's Bitcoin. No, it's not TAC. We're going to go to the watch list. We're going to scan on the watch list. MOD, TAC. I do have TAC in the watch list. And MOD. I'm going to put MOD in there too. MOD, TAC. TAC is Transatlantic Corporation. And if you look at this and we go back to the 4-hour algorithm right now, I thought I mistyped it. But if we go back to the 4-hour algorithm and we just run this on TAC, you can see $10.52. So you had a nice 38% gain on this. It pulled back. Looks like it's going for it again. Just pulled back to the 50-day TAC. MOD is one that we have in here. And this one, Alpha Pick, Modine Manufacturing, right before earnings. MACD has reset. RSI is reset. Is it going for another run? You can see Alpha Picks picked it somewhere around here. It's up 749% up till then. Alpha Picks is up 1,670%. I mean, they picked it. It's a great opportunity to buy it. You see that trend line right there that it goes through? You're below the trend line. You know, it is high. It's a high flyer. We got Starbucks. We got AT&T. We got Dollar Tree. We got Modine. Oh, I do have Modine in there. Okay, I doubled up on it. We have Toast. And we have others. BITS, TSLY, which is an income ETF off of Tesla. This one pays you I believe it's a monthly dividend, but the actual value of your asset keeps going down. Upper left, bottom right. I hate these stocks. I hate them, but I put it in there. And SDS, which is a ultra short on the S&P. You will always get killed shorting the S&P. If you go long triple levered on the S&P, you should be okay. But you will always get killed shorting the S&P. This is the only one that got a little cross up. And the reason it got a cross up here and an entry is just because the MACD, again, the algorithm's based on the MACD. So the MACD is just fluttering. That's the only reason it got an entry there. So if you have any questions, hit me up. Remember, everything's on the link tree. You can get Trendspider. Let's make sure they sometimes run a weekend sale. So if this price changed, yep, there you go. It is a weekend sale for Trendspider. There you go. It pays to stay until the weekend. $53 for standard. You get $54 for enhanced. They didn't take the price of standard down, but they took the enhanced price down. And the enhanced, what it gets you, doesn't change the abilities of what you do. It just gives you 10 active windows. It gets you 100 simultaneous alerts, 30 simultaneous trading bots. But the big one, and this is the big one, okay, you save 63% off of this, is advanced. And the reason I would tell you to go advanced is because they give unlimited one-on-one training. So if you are new to technical trading, meaning reading charts, this advanced at $82 a month, it is fantastic. You save over $900, almost $1,000 for a year. That is an unbelievable deal for the weekend. So sign up for the advanced. What you do is you go over to Trendspider, use this link on Linktree, and then my email address is right up here. And just email me and say, hey, I just signed up for Trendspider. I work with Trendspider to make sure that you're under my program. And then I email you back the links to import everything into your program so that you can get this 4-hour algorithm that shows you everything. Say you wanted to buy Apple at 227. Boom, your chart's going to show you buying Apple at 227. Say you want to buy Dell or you want to buy Cleveland Cliffs and see how that one works. The big one that I think works really well is Tesla. And Tesla is still out of the algorithm, but it's about to get you a buy-in. You make 171% versus buying and holding makes you 2% over 2 years. Okay? You can do it. Now, the other one that this one works on, MicroStrategy. MicroStrategy is a phenomenal gainer in the algorithm. And it's messing up again. It doesn't like my browser. But let's look at MicroStrategy in the 4-hour algorithm, MSTR. And I am in this one. I play this one on the 4-hour algorithm. I started playing this one recently, not through the whole 2 years, but I started playing this one recently. And if we've just run MicroStrategy, you can see I got 81% in 31 days. This makes you 1,156% versus buying and holding makes you 800%. I am still in this one at 202. I have not gotten out. I have not trimmed. I have not purchased again. It is Friday. I will not buy it, but Bitcoin is going to fly. And so my play on this one is MicroStrategy and iBit. And those are two. And I've got, good mid 5 figures in this. So that 81%, I'm sitting pretty in this position. So it's a good one. If you've got any questions, hit me up. Again, Trendspider sale is phenomenal for the weekend. Remember, the bundle saves you $150. So if you wanted to, by the way, you can get this one for about $600. Okay, then you get this one for about $600. So for $1,200, if $1,200 is in your budget, you get every tool that I have in every tool that I have, everything that I've shown you, you get. Any questions? Hit me up. Okay.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.